All right, fools.
Gentlemen.
Welcome to the morning show. AC, why don't you kick us off here?
Well, good morning, everybody. So just a PA here is that I had some camera problems yesterday. I updated my browser. Hopefully that takes care of it. But if in case I freeze, I have to reload and come right back in. But hopefully it doesn't happen today. So good morning, gentlemen. How are you? Yes. I mean, a lot of news, obviously. What happened?
I am too having a camera problem. It keeps on showing me.
Jim, I have that problem too as well. But yeah, clearly, obviously, as we featured in the breakfast news today, Tim, the Trump administration went ahead with the tariffs on both Canada and Mexico at 25%, and then also levied additional 10% onto China. They had talked about this in February. We're right after the election. Obviously, talked about it in February, got a delay. But then said yesterday it's going through, and at 12:01 today they hit, and that's going to impact billions of dollars of trade between both countries. And it's now yesterday markets sold off dramatically right after that news. Really, when the president said no, we're going ahead with it. The stock sold off pretty dramatically, and I think investors now are scratching their heads trying to figure out what this means for the economies and then for stocks as well.
Well, yeah. I mean, I think we don't know exactly what it's going to mean, but I think we know what it means in the short term. I think it means that as an investor, I'll just tell you how I'm thinking about this as an investor. Everything in my portfolio that is influenced by consumer spend and international trade, time to reevaluate. Not in the sense of like, I'm not looking to sell a bunch of stocks here. But I think you couple this with the news also that the administration is either on the verge of or apparently has already decided to stop all arms shipments to Ukraine. The world order has changed now, and the way that I think about this is, and I'm not trying to give you a political take here. When you decide that economic expansion, a viable option of economic expansion is geographic expansion, which has been off the table for 80 years in the post-World War II economy, that changes the equity risk premium. It just does. And so one example of this, for me, a big position in my portfolio is Taiwan Semiconductor.
Yeah.
Which I still like a lot, and I think it's smart that they are committing a much capital to investing in the U.S. Does that matter a lot if aircraft start landing from the Chinese mainland into the Taiwanese airspace? I don't know. That is something I didn't think that was not on my bingo card. I did not think I was going to have to deal with that.
Well, it was probably on there, Tim. It's just that the probability of it happening is. I mean, that's what investors do, right?
I thought it was close to zero.
That's right.
But now it's a non-zero.
That's right.
Now there is a non-zero chance that happens.
Yeah, and so Jim trying to price that into stocks, and then just in this case with tariffs, whether it's short term or long term. I mean, investors now are dealing with. I mean, obviously citizens too, but investors are dealing with this fact.
Well, apologies, but as the guy on the other side of the geographic expansion.
Yeah, right.
A lot of people might not like some of what I have to say today. So it's been nice knowing you guys.
I bet I'm going to like it. I'm going to like it.
It's been nice knowing you guys. Look, I've spent a lot of time. I have some thoughts that I'm not going to share, for employment stability. But one of the things I like to do is try to figure out as best I can, and believe me, my track record is both really bad and better than most. Is figure out what the end game is. What are the implications, right? When I did my MBA, I was very focused on the finance track of the curriculum. Act surprised, I know everyone. But probably 20 years on, the course I remember most is my marketing course, which is hilarious to me, believe me. The prof, he was fantastic. And his thing he would always go back to is, what is the implication? Whatever we're talking about, whether it's a Walmart campaign, whether it was at the time, again, it's 20 years ago. So at the time, the fast food joints, okay, were all about lean. You know, you had the Arch Deluxe around there and the McDLT and McDonald's, and it was all about low fat. I mean, you know, if you're like me, a low fat burger is, you know, what is the point? I'd rather eat the box.
Yeah.
Snackwells. Yeah, exactly. You know, cardboard. It's not just for breakfast anymore. But you know, he was always, what is the implication? So, you know, there is a burger chain. There's a burger chain here in Canada called Harvey's. It was owned by Recipe Unlimited, which is now owned by Fairfax Financial. So you too can own a piece of Harvey's. But at the same time, you know, it's exciting. When everyone was going into, you know, lean and low fat and, you know, you can eat your fast food way to weight loss kind of thing, Harvey's comes out with like, you know, a half pound, you know, 25% fat beefy burger and goes, this is the good stuff. They completely went against the grain, right? And it worked. The implication, who's doing the zigzag, but what's the implication of that? The implication of that is when everyone else, and Harvey's is much smaller, obviously, than McDonald's and whatever else is, you know, whatever else burger chain you want to look at. When everyone else was going in this direction, Harvey's went in that direction. Mm-hmm. And people, and it turned out, you know, fat is flavor. People wanted that direction. Mm-hmm. And so, I mean, and nothing lasts forever in marketing. And that's the reason why Coca-Cola, the most recognizable brand in the world, spends how many billions of dollars on advertising every year, right? Yeah. You know, because nothing lasts forever. You just have to maintain the low level brand awareness as you go forward. But you can have these skirmishes that end up with, you know, at least a temporary shift in your direction. What has that got to do with all of this tariff and trade nonsense? It's that I will be perfectly frank with you. I am struggling to see what the game plan here is. The best I can figure it, and again, I have a terrible track record here. Okay. And I'm going to be, you know, perhaps unnecessarily alarmist. I think there are administrations, Trump or otherwise, administrations know they have to move fast in the early days, right? You kind of set the tone and then you coast down, whether that's for 4 or 8 years. And no one can ever accuse the Trump administration of not moving fast.
That's right.
Right? Okay. I think internally they say we got 2 years to reshape the world order in our desired direction. That I think that desired direction resembles that of the 19th century robber barons, which you should then ask yourself, am I one of the robber barons? And if not, what was the implications for the people, the 99% who weren't? I think that's a reasonable thing to ask yourself. But it's like every move, like I was saying to Tim and Andy this morning, fools, like you guys import over 90% of your fertilizer. Do you guys like food? Do you like food? Because you just raised the cost of the major import, because you bring all of your potash in, ostensibly all from Saskatchewan, okay, which as of today is not the 51st state, and that it ain't going to be paid by the Canadian government. It ain't going to be paid by the American government. It's going to be passed through to you at the grocery store. You have just made a major.
Don't forget the farmers there. The farmers there are going to pay through the nose.
But the farmers, and then I see this morning, the story is that, you know, they're now giving aid. You guys are giving direct aid to the farmers. And I'm like, hang on. I'm pretty sure there's something that's been set up to eliminate government waste. A Department of something. Like the moves, and I don't want to go into geopolitical stuff more than I already have, but, you know, the moves that are being made. This is an investing show. The implications, I mean, you know, I'm not exempting Canada here because, you know, but politically, I'm not too sure we're friends anymore, to be honest with you. At least, you know, personally, obviously we're all friends, but geopolitically, like you guys, we're all going to have inflation that I think is going to make the post-COVID inflation look a little tame. At the same time, what are interest rates going to do? Like, I think this is setting up for stagflation, to be blunt. And so, I am leery of investing in a lot of stuff right now. Like Tim said, reevaluating anything that's got that consumer exposure, reevaluating the things that I think could be damaged. But I think you've got economic slowdown coming. I think you've got economic pain coming. I think you've got inflation coming. And the only thing I can figure it out, again, and this is the rantings of a crazy old man, I get it. The only thing I can figure out is, again, I mentioned earlier, you got to hit the ground running. And again, can't accuse the Trump administration of not doing that probably better than any other presidential administration that I can remember, and I'm including Trump 1. Crash the economy in the first 2 years so you can build it back up. You can blame the first 2 years. It's overcast from the previous guy. That's his fault. Blame him. Crash it and then try to build it back up, post midterms. Mm-hmm. That's all. Because the alternative of just chaos for chaos's sake is so illogical to me. I can't believe anyone would actually prefer that. That's my rant done. I'll see you guys later.
No, I mean, it's a great rant. I want to make this point because I think it's super important. We don't know exactly what how prices will change at retail, but if history is any guide, and history is always a guide, fools. When we see this sort of tariff activity, there is an inevitability. There is absolutely an inevitability to prices going up for consumers at the end state, and it'll be uneven. It'll be uneven. It'll certain industries will get hit way harder than others. I do think that in the immediate things that I am nervous about, and I will mention, I'm going to lock myself out of a stock that I've been buying.
Do it. I love doing this. I've done this much time. Home Depot, damn it.
And I wanted to buy more, but I'm going to pause on it. I'm going to tell you why, which is Toast. It's still one of my favorite stocks. I'm not going, I have no interest whatsoever in selling it, fools. However, I think it would be grossly naive on my part, Andy, if I told you that the input, just look at the inputs for a restaurant business. The major input for a restaurant business is food. 1,000,000%. That is absolutely going to be the case. Raw ingredient prices for restaurants around the United States, around Canada, are going to go up, and they may go up materially. That does not mean that Toast business is fundamentally compromised from here, but their customer base is going to be under serious threat. And a key portion of their business, they get their gross profit. They get their gross profit from two places: from their subscriptions, and that's probably going to be relatively steady. It was during COVID, so you have some amount of historical evidence that the subscription business is probably okay. But there's another piece of the business called the fintech business, which is driven directly by gross purchasing volume. I bet you any amount of money that gross purchasing volume is going to take a significant hit. Yeah, it's going to take a significant hit. So I don't think, and that makes me sad because I want to buy more of this stock. But right now, I think it's a dangerous time to buy more of it. That's just one example of how I'm thinking about this in terms of what Jim just said, implications. There are implications here.
Yeah, it's interesting you use the word sad because if, Toast falls 15% and you're a long-term buyer, you may be like, wow, this is a great price to now buy.
I know, but you have to, but the customer base,
that's the sadness.
Healthy. Yeah, is it a 15% haircut great for me?
Yeah.
Of course it is. But if you're going to compromise Toast's customer
Yeah.
base, that is something that I need to reevaluate. I'm going to need some time to reevaluate that.
Well, and the thing about Toast, and this gets to Jim's point, is that as investors, and I've talked about this recently, is that we're always thinking second, third, fourth level effects.
Absolutely.
Right. It's always like it's what does it mean? What is the end game? What does it mean? Buffett
What are
talked
the
about this in that CNN
Yep.
interview he kind of gave. He's like, you have to always mean, what does it mean? So, Toast, Tim, as far as I know, they don't have a lot of restaurants in Canada. They don't have a lot of restaurants in Mexico, but the second and third level effects of higher prices on food because of tariffs, the impact and how that goes through, how is the consumer feel? I mean, they potentially could be hit in a couple different ways. Now, to your point, is we have to see how this all works out. I mean, under the acts that the president is issuing these tariffs, right? He can pull them back at any time, right? So this is part of the uncertainty. Like, I think a lot of businesses just aren't sure of, like, is this really serious? Are we going to pull it back? What are the implications? Like, all of this, right? So, but it is going to impact them right now. And the question is that how does that ultimately, and we just don't know as investors. So I keep going back to the fact of, like, okay, trying to position a portfolio for the next 3 to 5 years, 5 years. What are the opportunities that I want to hold? Are the ones that are challenged in this kind of environment over the short term or long term? And importantly, how does that impact my risk profile of my portfolios or our scorecards? Jim.
Well, I was going to say a couple more things, although those are really good questions, and I want to struggle to keep them in my head so I can come back to those. But I was going to say, like, it's not just food, right? It's not just food where it's an input cost. Your gas prices are going to go up.
Right.
Because, you got 10% tariffs on Canada, on Canadian energy. I mean, I'm like, put 25% on. Come on, Donald, let's go. But also other implications are, I'm gonna rewind a little bit here. One of the things I try to do in personal relationships, family and whatever, and I talk to my kids about this a lot. I mean, you could probably hear their eyes roll in the back of the head from where you guys are sitting, it's just dealing with conflict. How do you deal with conflict? When you go into a conflict, there's the classic win-win, win-lose, outcomes, right? And I will sit here as an unabashed fan of the win-win outcome, where we go in, but I've said, look, there are those who do not agree with win-win. There are those who are like, win-lose, do as thou wilt is the whole of the law, beggar thy neighbor kind of thing. I think we're kind of in that realm, and I wish we weren't. But I am, until I'm proven otherwise. That's where I'm like, Tim talked about a changing world order. I think that's the changing world order. But one of the things I also talk about is when you have those types of things, win-lose, when you have conflict as blood sport versus disagreement where we can work together to, because that's what free trade is, right? Free trade agreements are essentially, we have disagreements. We're going to negotiate through. We're going to try to have a win for all of us. And at the end of the day, you walk back from that. And if everyone's kind of mildly dissatisfied, that's a good outcome.
That's a good outcome, right?
But an implication, to go with that word again, Gord Robinson, however, wherever you are in the world nowadays, he's no longer with us, but my old prof, thank you for that word and drilling it into us a lot. The implications of a win-lose mentality is quite often escalation. And you're seeing that even today. The recently re-elected Premier of Ontario yesterday, who I am no fan of, okay? Doug Ford, a.k.a. Dofo, a.k.a. the brother of Toronto's infamous crack-smoking mayor, if you remember that guy. Yeah, that's our guy.
Hence your hat.
My Quebec Nordiques hat, yeah. The Quebec Nordiques make more on merchandise sales today than they ever made when they were a real team. Anyway,
yes.
I'm dead serious. Go
Not
to downtown
surprised.
Quebec City, and you would be amazed.
Yeah.
But the implications of conflict, especially in a win-lose type mentality, is escalation. And you are seeing escalation today. Doug Ford last night said basically we'll shut off the electricity to the Americans coming out of Canada, the Canadian, we export to you guys. Okay. Turn out the power for 2 million of your homes. Now, Doug, shut up, number one. Right? That's dumb. I'm sorry for going politics, but also it's Ontario politics. You guys don't care. But, like that is escalation.
Right.
You've already seen the Trump administration say in response to, Canadians and Mexican governments have dropped tariffs the second you guys drop tariff. Okay, we're going to do countervailing tariffs. Trump et al. Have said, cool, we're going to escalate again in April. And Andy, your point that this can all be walked back, this can all be turned off at a flick of a switch is real. I agree that it can be, but will it be? And so, the present mentality for me, and I'm just like, okay, where do you want to look? Because again, investing show, all of this politics stuff is what it is. Where do I want to look? What do I think will benefit? And okay, certain natural resource stocks.
Benefit, Jim. Benefit or not, or somewhat resilient.
Somewhat resilient. Yeah. You mentioned Taiwan Semiconductor earlier with their $100 billion investment announced. At least that money's not going to manifest itself anytime soon.
No.
But the announcement. Okay, that's a mark to, hey, have I not looked at Taiwan Semiconductor recently? Should I? But then, of course, Tim has then, thrown a dart in that as well and said, well, planes landing that aren't from Taiwan. So it's there. I am personally, and I recognize the irony of saying this for a guy that has to recommend a new stock every 2 weeks. Okay,
Right.
Yeah, I think the playing field, because there are times when politics makes the playing field. Andy, you might remember this. This is going back a while. It's 2008, and we were sitting in a pay dirt meeting, and it was right at the start of I think it was June-ish 2008. I don't even know if you remember if you were in the meeting or not, but there's a bunch of us in there, and and as the global financial crisis is starting to get its fingers in. And a couple of people in the room were kvetching, not you. I don't remember if you're actually in there, but you might have been in there. A couple of people were kvetching, and I'm just like, guys, shut up. Whatever we pick's gonna be down 10% next week, regardless. We still have to make a pick. Right. Stop moaning, and let's pick something. And so, what do you want to look for? What are some areas where? Because again, fully cognizant, could be down 10% next week because of geopolitical concerns.
Yep.
Where do I want to go? And so I'm thinking I'll give you one quick one, and I've mentioned it before. MTY Food Group. It's on the restaurant side of things. It's a franchisor, and it's a Canadian company. Why would I be excited about that? Well, I'm not terribly excited about it, except for one thing. I believe about two-thirds of their banners, their franchise revenues, are coming from American stores. MTY has, over the past decade, really gone into U.S. expansion. So those are monies being earned in U.S. dollars coming back to Canada, being converted at a now better rate, right? That is a place to hold out. I see this morning that Enghouse, again, I'm going to go with the Canadian stocks because I'm feeling a little patriotic this morning. Enghouse, which is a software company, if everyone knows Constellation Software in Canada, which is the best company in Canada, in my opinion, Enghouse is trying to be that-ish. They've so far not done a terribly great job, frankly, but they've just made an acquisition this morning. Where have they made the acquisition? Slovenia, of all places. They are going, so they're branching into Europe. You're going to see, I think, look for places where there are going to be untouched by tariff and trade action, for example. Or look at something where it's almost all domestic, and it's also maybe, and it's one of the things I'm going to do is car prices. I hope y'all bought new cars last year. I'll put it that way. Okay. If you need a new car soon,
or you can be like me and don't have a car. You could do that too.
You could do that too. Most of us need cars, though. Thankfully, we replaced our cars last year, so we're good for the next decade. But if you like if go look at how many times parts and assemblies cross all three borders.
Yeah.
And the study I was reading yesterday is saying these tariffs come into effect, it's going to add $12,000 to the price of your average car.
It might.
Well, good thing. Because again, something is made in Mexico, comes to Canada for finishing, goes down into the U.S. for additional finishing, comes back to Canada for assembly, goes back into the U.S. for painting. Crosses the border 4 or 5 times. If you're going to slap tariffs at every stage of that, and collect them, then it's all going to get passed on. I hope you don't need a car, but again, snap your fingers and it all goes away. And so to Tim's point, the equity risk room, how do you make bold investment decisions in that environment?
It's very hard.
And the answer is, I'm not sure you can.
I'm not sure you can either. I want to answer a question here, which I think is a very good one. And we don't like having
let's do
well, we don't like having to do politics on this show.
No, I hate politics.
But it's
I prefer hockey.
But I think it would be incredibly naive to think that in this particular, this is one of those special exceptions where the political decisions that are being made on this side of the border right now have real implications on equities. That's we're fools. We're not trying to dig out anybody here in particular. But I have to tell you, you cannot take it from somebody who has buried his head in the sand on hard conversations in the past. It does not work. You must face the truth here is that what we're seeing has some serious implications that might be long-term. And as to Jim's point, they might get snapped away later this afternoon. If the market has a really bad day, it is entirely possible that the administration says, nah, we were just kidding. Like, that is absolutely possible. That could happen. In the meantime, here is a question that I think is really important from Marjorie Johnson. What do I do as an individual investor? Do I sell everything? And I can't give you any personalized advice, Marjorie. I can only tell you what I'm doing. I am not selling anything off of this. Now, your other question is really super important. What industries will really struggle in this new world order? So there's a two-parter to my answer on this, Marjorie. The first is we don't know yet. It's too soon. We do not know if tariffs are going to be magically snapped away. We don't know how big of a bluff or not this is. But if it isn't, then consumers are really going to take it in the down belows. Pardon me. Pardon the visuals, but that's going to happen. And so industries that are heavily dependent on consumer spending, consumer driven industries. And by the way, in the United States, we have a consumption economy. And so in the United States, it'll get rough. It will get rough. We don't have the industrial economy we used to have. We have a consumer driven economy. So that does get rough. So in the meantime, what am I doing here to kind of guard against this? I'm very grateful. I have a lot of cash in my portfolio, and I am probably going to be, I think fools know this. I tend to be buying in very small amounts. So I'm probably going to be buying in even smaller than my typical small amount. That's one strategy I will pursue until I have more information. And then another thing I will do just as an analyst, as an advisor here at The Fool, I am probably going to be recommending into strength. So let's talk about a company that just recently showed some strength that could get more interesting to me, particularly if the macro depresses it a little bit. On Holdings had a pretty good quarter. They had a really good quarter. Now the stock's up 7% pre-market. So I would prefer it to be like, the macro is going to kill this thing, and let a a brand that is demonstrating real power, continue to grow that brand power, and the market dismiss it off the macro. That'd be a very good situation for us as investors and would make me want to be more eagerly recommend it. But situations like that, Andy, where I can see underlying strength, and so there's a bit of a mitigating factor to some of the things that depress consumer demand, like pricing. People who buy, and this is one of those weird situations, people that buy On Holding shoes, they buy the On brand. You know what? They're not price sensitive. They're not price sensitive.
I was going to say power of brand.
Yeah, they already pay just an absolute fortune for that product. So that's one of those rare situations where I do think what we're talking about this morning has vast implications, Andy. But this is one of those weird situations where a brand that's already commanding price premiums is less likely to be like tarnished in the midst of prices going absolutely bonkers.
Jim, you have a reply?
Well, I love that one actually, and I'm gonna go. I'm gonna pick up on Tim's theme of dealing into strength, and some people are going to think this is a little strange coming from me, but I like to keep people guessing anyway. There's been a couple of really strong earnings reports from a couple of shall I call them rule breakers? Am I allowed to use those words, Tim? I feel a little sometimes.
Yeah.
Well, I feel it's a little
water's warm, man.
Okay. If you're looking for a couple of stocks that had absolutely great quarters and the valuations are stretched, I'm not going to say otherwise.
Yeah.
But dealing from strength, and I think will be able to mitigate the political risks. I thought Shopify's quarter and I thought Mercado Libre's quarter were probably two of my top 3 quarters from the just reported sessions.
Yeah.
Okay. And Mercado Libre, extra US, extra Canada. A lot of what they're doing is completely outside of our worlds, gentlemen. Okay. Although I did see Mercado Pago all over the place when I was in Mexico a couple weeks ago. That's pretty good. I want exposure, and and I also run about 40% of my personal portfolio, in various index funds. And I've always said, when I talk to people about indexing, because I say, look, if you are someone who is not, you're not a professional investor, you don't have the bug that the 3 of us have, and you have a real job, and you just know, like, you're not passionate about investing. So no one in Slido right now is going to fall into this category. No one's in Slido going, oh, I got to invest. Fine, I'll tune it. No, if you are a member of the Motley Fool, you are making a conscious choice to take an active role in your future success, and we think that's great. But let's face it, there's some people who just don't care. And for those people, low-cost index funds, as Buffett has said many times, and as we have said many times, low-cost index ETFs that track the S&P, and if you're Canadian, track the TSX, and get some broad pan-European, pan-Asian exposure, you can have a very nice, perfectly acceptable investing career doing nothing but that exposure. But, in recent years, whenever this comes up, because I talk to laymen or talk to people who aren't terribly interested, or talk to friends who, hey, what do you do for a living? Oh, I can't pick stocks. Well, you don't have to, really. I always say, look, again, S&P 500, TSX, because I'm mainly talking to Canadians, and this broad pan-European, pan-Asian exposure as well, right? And what I've gotten back in the last couple of years, if people have been enamored by the S&P's performance, heck, even the TSX has done well, frankly, which is a little shocking. And they kind of go, yeah, but that European and Asian stuff, and they kind of, well, guess what did just fine yesterday, right? And I've always said the reason you want to do this is because you want diversification, because today's high flyers will be tomorrow's laggards. Today's laggards will be tomorrow's high flyers. And so, but I look at Mercado Libre and Shopify as Tim kind of inspired me to look for things. And, you know, Shopify, they enable so many things. A lot of them are country specific, so you don't have to worry about tariff thing there. You might have inflationary worries, but but like, again, I go back to the question that Ian and I asked ourselves, Ian Butler, you know, up here with me in Canada, that we asked ourselves back in 2016 when we first recommended Shopify, and then got the opportunity to introduce, you know, Andy and Tom and some of our American friends to. You guys came up to see us in June of 2016, I think it was.
Yeah.
And you know, we arranged a meeting with the CEO of Shopify. Little did we know what we were doing. But like, you know, the answer is always, okay, yes, it's pricey, but how many more businesses can Shopify empower?
Yeah.
And the answer is more. And the answer today is the same as it was 9 years ago. And just like little things like the Globe and Mail, Canada's national newspaper, their sales are enabled online through Shopify. Netflix Canada is enabled online through Shopify. I got my local junior hockey team I go to, the Guelph Storm. I bought some merchandise there a couple weeks ago. The terminal in the arena is powered by Shopify, you know, and I just like more. So like, if you are, you know, looking for opportunities, I think it's there, but you know, I really like Tim's point, I guess is what this all comes down to. I like Tim's point of deal into strength. And
I think in trying to find companies that can handle price increases, that have some pricing power, whether it's on, I mean, I bet you we probably have 5 pairs of On shoes holding here.
Do you really?
And Tim, I got to say, I am price sensitive.
That is 5 more than I have.
I got to say the prices for those On shoes, I think I bought mine from Amazon. Jamie bought them. My wife bought them because we needed specific shoes for school. And On Holdings was one of the only ones that had like solid colors. Anyway, but I'm definitely price sensitive, but that quarter they reported was, as you mentioned, was pretty outstanding.
It was outstanding, yeah.
But they could be impacted by tariffs as well, too. Okta reported a very good quarter. Remaining performance obligations up 25%. Sales exceeded expectations. They're more profitable. They have their new CEO in. They're adding more and more million-based customers to their backlog. So, and that stock's reacted positively over the last few months too. You know, they have international customers, right? Their customers in the U.S. might be pulling back because of all the macro sensitivities. You know, so all businesses in some ways, to Jim's kind of opening point, will be impacted by some of this. And I think it's up to us to find those businesses. Chipotle, right? Like, so they're shifting away from Mexican avocados to other spots, right? But they still sell a lot of Mexican avocados, but do they have the pricing? Sorry, they don't sell. They use a lot of Mexican avocados. Are people still willing to pay an additional, you know, I think in the US now, additional avocado at Chipotle costs maybe $2, $2.50. We get the vegetarian option, so it comes with it. Are we willing to pay $3 or $3.50, $3.25 if they pass that on? Or are they efficient enough to be able to manage and take some of those prices in? I think some of those really large scale retailers have been continuing to refine their supply chain, and they have the scale to be able to manage some, you know, 25% is a lot. But, you know, how does it all work with whatever goods and all the details in that, to what that impacts them to be able to say, okay, we can take some of this on, we may pass a little bit on, but they have the ability to be able to operate in an environment that is like this now, whether it lasts a week or whether it lasts, you know, 6 months or a year, whatever it might be. Hopefully it's not super long. So trying to find those companies that are the resilient, right? Like, you know, and Jim, I think Shopify is one of those companies. Mercado Libre, by the way, that was a great quarter. Their financing arm, and we've talked about this before, right? Like how much more they are adding and what kinds of loans they're adding onto their books, how that is helping their profitability. What is their loan? How is their reserve rate changing? Like that is an interesting dynamic to watch with Mercado Libre. But yeah, that was a continued impressive performance, and they are the clear market leaders in Latin America. I think that has, and by the way, they're building out the logistics business, which continues to be impressive. That has real scale. And so depending, how any price increase, and God, no one knows more about dealing with inflation than Mercado Libre does.
Yeah, no kidding.
Right. So
No,
just
even
yeah,
the professionals.
managing those costs, that's the kind of businesses that we're looking for. So there's so many great questions in here. Like, what kind of businesses are we trying to find? You're right, Tim. It's the ones that have, for me at least, it's the ones that have every business. If this goes on, businesses are going to struggle with this. I'm trying to find the businesses that are resilient enough on the pricing side that they can manage this environment, and the stock over the next 5 years is going to be a lot higher than where it is today.
I will say, like, there's a principle, and there's an economic principle that really applies here, and I think it's useful in your analysis in looking for businesses. The ones that have this feature, I think, are likely to be more resilient and more likely to deliver growth in an environment where, let's say, inflation does kick in. Let's say, prices really start soaring in some particular industries. The businesses that have real price elasticity, I think, will be in better position. So in this case, what I mean by price elasticity, that's a little different from just straight pricing. Pricing power, classically understood, is the ability to raise prices. Price elasticity means that even if I want to your point, Andy, if I have some slack in my supply chain and I want to not increase prices as much as, let's say, my input costs have come up, let's say 15%, but because of the strength of my supply chain, I really only need to raise prices by 10%.
Right.
That's price elasticity. That gives
Yep.
you some flexibility and some power that another business might not have. And I do think premium brands tend to have this more than others do. So there was a question about, is this a time for premium brands? And I think the answer is, it depends on the premium brand, as like it always depends on everything in context. But generally, is that a place I'd go looking? Yes, I would.
Well, I mean, yeah, Berlin asked about Ferrari. I mean,
Ferrari.
Yeah,
that's a little
right,
too premium for my taste.
Well, yes, but I don't think I'm the
But do you
the
think
target
their customer
for them.
base is good? Do you think their customer base is going away? Nope.
Probably not. All their
Probably
cars are
not.
sold before they're even, imagined.
Yeah, and they're more probably made all in Italy, right? And although
Right.
parts are coming from all over the place, right? So,
Yeah.
right.
Yeah.
So, but that's been such an impressive stock,
Yeah, for
because
sure.
of the real appreciation of their client base and that brand that they nurtured and sustained and kept at their knitting, Jim, and didn't chase different parts of the market, and
Did
now
not
slowly
diversify,
evolving.
I believe,
Now
is
slowly
our-
evolving into EVs. But I think that Ferrari's a really interesting. It
Yeah,
just
it's an interesting
the stock got away from me. I just never kind of went back to it to my discredit, because we had looked at it a few years ago and thought, wow, I think at the time it was selling for like, I want to say like a low 20 EBITDA multiple or something like that, or mid 20 EBITDA multiple, and we didn't go into it.
Yeah.
Well, can we continue the theme of find strength or things that can be resilient?
Yeah, do it.
Yeah,
Do it.
I think I got a couple more for you.
Great, go for it.
Because again, I want to be positive. I really do. Tim is like, who are you and what have you done with Jim Gillies? You talk about premium brands. I'm not sure it's a premium brand, but I'm going to hold up my lovely Roll Up the Rim to Win cup here. Now, you're Americans. You don't know what Roll Up the Rim. Roll Up the Rim to Win in Canada is the third largest holiday after Christmas and Thanksgiving. It is every year. You can win a prize. Most of them are coffees. I got a couple of free coffees right here. But in all seriousness, Roll Up the Rim to Win is part of Tim Hortons. Tim Hortons is, of course, owned by Restaurant Brands International, parent company of Tim Hortons. Obviously.
Did you get the donut this morning with your Tim Hortons coffee?
I try to stay away from the donuts, man. I've had a little too many of them, so I'm just, trying to be responsible, Timmy. You know how it is. I know. It's things I wouldn't have said when I was 30, right? No, like Tim Hortons is one of 4 brands owned by Restaurant Brands International. Okay. The others being Burger King, Firehouse Subs, and Popeyes chicken, right?
Yeah. Yep.
Okay. Pretty good, right? Decent brands, recognizable brands, except for Burger King. I mean, in terms of decent. Sorry, I'm sorry for the Burger King hate. The last time I ate at Burger King was before I had children. We'll put it that way. And the meat was the color of Tim's sweater. Yeah, it was just like, nope, I'm out. I'm sure it's changed. But no, the recognizable brands. But Tim Hortons provides, I believe, somewhere between 50 and 55% of overall EBITDA at Restaurant Brands International, ticker symbol QSR, which is funny if you think about it. And Canadians will have to have their limbs amputated before they all go to Tim Hortons 3 times a day. Okay. I don't know about other businesses' resiliency in the face of trade wars and inflation, whatever like that. But I promise you, the frozen chosen will continue to go to Timmy's. Okay. You want some strength. You want some resiliency.
Yeah.
You talk about, and again, this is going to,
By the way, Tim Hortons also responsible for 50% of the in-stadium advertising at NHL arenas around Canada.
I wonder why. See previous comment about Coca-Cola, always advertising. Always. I'll give you another one. Turning Point Brands. Anyone know who they are?
No. Educate us.
You're going to hate me for this one. Turning Point Brands is the parent company. They fools. You have to make peace with your God. Okay. You have to. Yeah, and if you don't like this one, that's fine. Turning Point Brands is a tobacco company. Moist Snuff Tobacco. They are the parent of Zigzag Rolling Papers.
Yeah, right.
So there's if you want to think about it, you've even got a little bit of an into the marijuana industry if you want, for those who choose to imbibe and roll their own, I suppose. But they're also in this the new tobacco. And again, I've never used tobacco in my life. I have no desire to start. I lost a number of family members to tobacco-related things, so I have a particular personal belief about tobacco. But I've always said, separate your personal belief brain from your investing brain. And the investing brain says, "Hey, I bet their customers are resilient," and especially as they've gone into nicotine pouches.
Yeah.
Which is, by all accounts, again, not a user of the product, but by all accounts, has better health outcomes than obviously cigarettes and chewing tobacco, whatever. They also do chewing tobacco. Moist Snuff Tobacco, which I only learned was a thing when I was researching Turning Point Brands. They had a bit of an issue a couple of years ago. They replaced their long-running CEO, who was excellent, with a McKinsey dude. So he lasted 10 months.
Yeah.
And then they replaced him with the long-term CEO's long-term understudy. And I'm like, I don't know why you didn't skip the middleman, but whatever. I'm sure
sounds like Nike.
Doesn't it ever? Like, and you just kind of go like, okay. But Turning Point Brands has had a bit of a renaissance here, and they have tripled over the past 2 years at the same time that the market's up about 40%. Because the CEO gaffe really drove the price down. Really kind of like this one. People are going to be standing from that. And the last one I'll give you, Winmark. I know I've heard you've talked about Winmark a bunch of times on the show in various times. But Winmark is the parent company of gently used resale clothing and other items. So Once Upon a Child, Play It Again, Sports, Plato's Closet, Style Encore, Music Go Round. It's a franchise business. The stock is down about 30% from its all-time high. Makes a lot of cash, very low capital. And in recessionary times, in inflationary times,
100%,
you are going to go. And I went with the CEO of Winmark back in July when I was in Minneapolis. I went to an opening of Plato's Closet, and I've never seen anything like this. This is a used clothing store, Andy. It's a used clothing store. It was the grand opening. I got there at 10 in the morning. There were 300 people lined up outside. And the two women I talked to at the front there had been in line since 1:30 in the morning.
Yeah.
And that's in good economic times.
Yeah.
Yeah.
Yeah. And by the way, like, and just in my area, I've seen 2 secondhand clothing stores close. Close. But this is why what makes Winmark's ability, and this is because there was a question about Shopify. If consumer spending is slowing, well, these are the companies that can handle different economic conditions.
Yeah, you can offset customer spending slowing by going to more vendors, which was
that's right, because of how their businesses, and Winmark from the decades, years they've been running facilities, franchising, Played Again Sports, Plato's Closet, all different ones, and they have it operated down to a science. And so, because that is not an easy business, hence why my local little, unfortunately, mom and pop stores closed, but Plato's Closet can do well.
Thrive.
What the other thing that I love that one. I love that one because that's a business. Tell me if I'm wrong here, but this is my this is my impression of it, is that's a business. While it is difficult, it never goes out of style. For like that is a perpetual need, and it is highly predictable for those that know how to do it. I think you got to know how to do it, but once you know how to do it, it is highly predictable, which is fantastic in times of, tremendous uncertainty.
By the way, Economist article from this week, the business of secondhand clothing is booming. Can it be profitable too? Now there's lots of different
very much so. Winmark is very profitable.
Right. But yeah, that's what I'm saying, right? So the perception is that you can't make any money on that. Yep. But Winmark, WINA. Thank you. WINA has done it for years and years,
for decades,
and years,
as you said.
Yeah, and I mean, like, just exceptionally run, and very, very efficient at being able to franchise and then help those franchisees.
You want me to tell you a quick story?
Yeah, sure.
We got just us here, right? No one's going to notice, right?
Yeah. Yeah.
Okay. The CEO, Brett Heffes. So I once wrote in a long ago, and I've met Brett Heffes a number of times, talked to him a number of times. I think very highly of Brett Heffes. Okay. But I originally got into Winmark back in 2009 on the strength of the former CEO, John Morgan. And so when I wrote, I believe it was, remember Stocks Ox Guides, it was Stocks 2012,
Stocks
2013. It was one of those I put Winmark in there.
Yeah,
and for those who don't know, we're given criterias to fill out, kind of thing. Like you want it, risks and upsides and risks and why we might want to sell. And you have to come up with reasons to sell, and that's the part I hate about writing recs, because I prefer to never sell. So coming up with hypotheticals. So I basically said, well, if John Morgan moves on, I might move on as well, kind of thing. And I spent all of 3 seconds thinking about that part and then never thinking about it again. But remember, what you write and what you say can ripple through history.
Yeah.
And the first couple of times I met or had an occasion to chat with Brett Heffes, he didn't bring this up, but after we'd established a certain degree of familiarity and happy about this, he said off the record, so I'm about to say on the record now, he was joking a little bit. He says, when you wrote that, and this was when I learned he had a copy of Stocks 2013.
That's amazing.
Because he was the COO at the time, right?
Yeah.
And he says, when you wrote that, he says, and then when I ascended to the CEO chair, I took that as a personal challenge. That's amazing. I was going to shove those words down your throat. And I'm like, thank you for making me eat my words, Brett. I absolutely am fine with that.
And by the way, Brett is still there, and Winmark now is at almost a 2-year low.
Yep.
So it's right about, it had that drip like maybe sometime last year, but it's, the stock price. So like here you have a business that is exceptionally run that for 2 years really kind of has just kind of like, it's had its ups and downs, of course, but
they've largely flatlined on their results.
Right. But the stock's up 50% in value over 5 years. So it just kind of went like this, and then it's like this. And then, so I look at that and I'm like,
they've also paid you a couple of giant dividends too.
Yes, exactly. So huge dividends, which is not counted in that, what I was looking at. Right. So, that $300 stock is not the same $300 stock from 2 years ago.
Yep.
But that, if that's the kind of business that, like, from the resiliency side and the pricing environment, inflation, and they are helping consumers save money
by smart people, It's Winmark. I mean, full disclosure, I don't think I'm telling tales out of school. One of my favorite companies.
Yeah, and we've been and it's been recommended in various spots over the years.
Yep.
So
I want to point this out from Ed. I think this is a really great observation, Ed. Warren Buffett must be a genius for having 350 billion in cash. I don't think he needs that much, but Ed saying maybe this is a buy. I mean, Warren Buffett is quite famous for just waiting for the fat pitch. And honestly, Ed, you might be right here. Maybe for Uncle Warren, the fat pitch may be coming, and it may be thanks to tariffs absolutely tanking some businesses he's had his eye on. I mean, that is another thing to look at here. Look, I am not your classic value investor, but I'm not stupid. Like, if a business that is fundamentally improving is going on sale, I mean, look, I'm not a dummy.
Yeah. And let's not forget, he has far more invested in businesses, whether it's public or private.
Sure.
More, his cash is higher than the public holdings.
It's outrageous. I mean, he's got so much cash.
But right. So it's so relatively, if you just think about that Berkshire as a portfolio, he still has a bulk of the capital tied into businesses.
Of course.
Public or private.
Of course.
Right. And so like raising capital to balance some of that out, like Tim, like you said earlier, and some comments have come in saying I've been raising some cash. We've been raising some cash in some portfolios is very astute. Now, whether he goes shopping, we check out the 13F and go shopping this quarter or not, but I think I think he's not ready to.
No, I think he'll be patient. I think, this is one of the great lessons I have learned following, Berkshire and owning Berkshire is that, they have been one of my models for just reminding me, like, I really don't need to act quickly, and I have been very well served by moving slowly.
Yeah, we just took a comment down, I think, from Ted that talked about the Chipotle CEO saying they're going to absorb the costs. That's the question. So, right. So how long are they going to do it? So they're shifting their supply chains, but they're absorbing some of the costs. So companies are going to do this. Yeah. And it's for me, it really is a timeline thing. If you're making forecasts, and I personally I can't see it lasting super long, but that's just my best guess.
Never.
My best guess.
I am just happy that one of my hobbies, not investing, one of my hobbies is cooking. And I in a world that this is going back to COVID as well. We see that we've seen food price inflation. Go to your favorite restaurant. The prices today are 25% higher than they were 3 years ago. Yeah. In fact, Jim Mueller was up here this weekend. Actually, I think if you didn't know that, we had a little skit where he was downstairs, I was up here, and we pretended we switched coffees. So I went down and we changed coffees, and I walked back upstairs, and I think only JMO noticed.
That's amazing.
But we went to a favorite restaurant of mine here, and I noticed they jacked their prices for the first time in a few years. But tough times happen, and we're not even too sure these are tough times yet, or if it's just
they might become tough times.
They might become, or that might be again. It might be snap the fingers again. But what I've said to people, I think I tweeted it out yesterday, is basically like, look, this is not a time for YOLOing into things. This is not a time for. This is a time to take from Tim, to move slowly. Yep. To think things through. I love that this hour we've kind of we took away my angst coming in with and really focused on implications and investing from strength. I think that's great. No YOLOing, things like maybe if you are so inclined and have the ability to do so, maybe deleverage your personal lives a little bit. Try to carry as little debt as possible. I'm a no debt guy, so consider the source. But and in the advice of my grandmother, long departed but not forgotten, this too shall pass. And things will unfold. I'm going to mangle a quote from Robert Heinlein that I'm going to get out of your hair, but Robert Heinlein, don't be a pessimist. Pessimist might be more correct than an optimist, but the optimist will have more fun, and neither can stop the flow of events. So don't be a pessimist. And so, I thought that's my takeaway from this. But one way we can lower your own personal costs is do your own cooking at home and skip restaurants.
There was a question or a post in there about like, how about grocery stores if we're all going to be eating from home, not restaurants?
Well, I saw that they were specifically mentioning Sprouts Farmers Market, which I've recommended a couple times, been very good for us in Hidden Gems Canada. The problem is whether it's Sprouts or Loblaws or any a lot of the grocery chains, it's almost like they've seen this coming. Their stocks have done really well the last couple of years. So I kind of have in my back of my mind a little bit, buy the rumor, sell the news.
Right. Yeah.
But anyway, I think we're past our time anyway, so I should probably shut up.